was the last day of April 2024, and people in the crypto market want to know, or are already assuming, did CZ's sentencing in court cause the price crash that we saw across crypto yesterday? Right? So people are saying, hey, did CZ's sentencing crash crypto prices? People are even assuming it. CZ sentencing caused crypto crash. And the answer is, of course, no, it didn't. Right? What did? Well, the answer is very short. The VEPs. Okay. Now, I've been telling you for how many weeks now? 7 weeks already. That the assets since the middle of March, right, have been in mean reversion on assets like Bitcoin specifically. Bitcoin has been in mean reversion on the 7-day time frame since about the 14th of March. Why? Well, because that is the last time on the 7-day time frame that the asset did in fact touch the 3 STDEV band to the upside of the 3012 RMLR. If you don't know what that is, well, of course you don't, because you don't trade the VEPs. In which case you should get your butt over to alphatradinghq.com/discord. Again, that's alphatradinghq.com/discord. And you can learn all about trading with the VEPs, starting with the free volatility starter pack. I'll get you all set up and learning how to trade volatility, probability, and statistics properly. And after you've done that, and you've learned how to learn all that, and it's free. Did I say free? It's free. After you've learned how to do that properly, well, then you can upgrade to our Pro Trader tools if you're actually a serious trader. You can even try a free trial for a couple weeks and then see if it's for you. And again, most people are not going to do that because, well, you don't like to learn, most people. Statistically, oh well, you're lazy and you want signals. So let me tell you again, CZ had nothing to do with the price of crypto going down to 60 yesterday. And in fact, if you watch yesterday's live stream, you will see that we literally told you where it was going to go to. Right? And it would touch 60, even dip below it, and go straight to a very specific daily buy, or support if you want, but a buy line on the VRE. And it went exactly there and bounced exactly from there. How do we know? Because we can read the volatility, and we can read the returns and the mean of returns and the variance and the entropy and all these other wonderful tools that we have at our disposal in the suite of tools that we call the VEPs at Alpha Trading. Now, why do those tools matter? Because they help us see what's going to be on the current and future candles. And by what's going to be, I mean, what are the results going to be of the returns, thus leading the price to follow those returns. Because price does not determine returns. Price does not determine volatility. Right? Volatility and correlation is what tells the price what to do. Right? And that's what tells the price the direction it's likely to go in. Returns are literally the thing that move away from the mean of returns and mean revert to the mean of returns. Right? Volatility is just the standard deviation of returns. So when we say returns and volatility, they are really very related, because there's returns and then there's the standard deviation of returns. And again, the standard deviation of returns, right, or the STDEV, or the normal distribution, right, that, when you add it with the correlation of the price action, right, that together will tell you very highly probably the tendency of the price action. Springtime. Flowers. Yay. Very nice. Again, CZ being sentenced to 4 months in prison in the 4th month of 2024 for scamming or defrauding or doing nefarious things with about $4 billion. Guess what? That's all coincidence. That's things people want to find, patterns for, if you will. People will say, well, he should have gotten 4 years. Right. Well, he got 4 months. And it has nothing to do with why the price of crypto went down. And people will say, what are you talking about? When FTX collapsed, it caused the price of crypto to crash. No, it didn't. The VAPs triggered the price crash in crypto. As it happens every time there is movement. Now, can you say that outlier news stories may have some influence in how people perceive the market and therefore determine whether or not to buy or to sell an asset? Sure. But guess where that information happens first? Because here's an example. What do you think would have happened if CZ had gotten no sentence and the price collapsed? People would have said the same nonsense. Oh, it's because CZ didn't get any prison time. Now people don't have confidence in crypto. They think it's just a fraud, blah, blah, blah. And they get away with it. Two-tier justice system or whatever. Right? Okay. Same nonsense would have happened. What do you think would have happened, right, if he got the sentence that he got and the price would have gone up? Oh, this means people like crypto and everybody's confident in it, and that's why the price went up. Nonsense. Right? It's all nonsense. So I'm telling you, it has nothing to do with that. That event is just an outlier in the stack of events. But it's not an outlier that has any bearing on the actual trading. Because, yeah, sure, people may read the news and then have some sort of influence from it. But you know what else? You don't know what that influence will be. And neither do they until the moment they actually place their order to buy or to sell an asset. So it is completely preposterous to assume, since there is absolutely no correlating evidence to indicate otherwise, that a person being in the news makes a market go one way or the other in particular. Either way it would have gone. The headline would have read something about it. Falsely. It would have misinterpreted that event as causing the market to move that way or the other. When in fact, the only thing moving that market was the volatility, the entropy, the probability, and the statistics. That's it. That is what moves market. Now, where's my evidence for this? Okay. Other than the fact that it always happens this way, and we can constantly demonstrate in one quote-unquote black swan event after another, or one quote-unquote major event after another, you always see the move happening before the headlines. That's okay. So that's the evidence itself. So that's how we know it. It's not an accident. And people are constantly misjudging and misinterpreting and taking actions on the wrong things. If you know where the distribution levels are, if you know where the mean reversions are, if you know where the volatility is looking to move, if you know where the returns are looking to move, you know where the entropy is looking to move, if you know that the entropy is in a random walk or in a trending move, all these things. If you know that there's divergence between the returns and the price, or between the entropy oscillator and the price, well, then guess what? Then you actually know information that matters. It's leading information, right? How do we know this? Well, it's the information that looks to the future, as opposed to lagging information, which is what Voodoo TA is, which looks to the past. And how do I know that the VEPS is the smarter and better way to trade? Well, look at the HFT firms, right? The high frequency trading firms. What do they use? Did they use lagging information? No, of course not. They laugh at it. They push it down the line. Right? They make sure everybody else in the trading market, what they call the dumb money, are the people who use lagging information. Your SMAs and EMAs and your random chart art, your triangles and wedges and channel, all that stuff. Lagging or subjective and irrelevant information. It's a joke in the HFT world. They call it dumb money, people who use that. And they're right. And that doesn't mean you're dumb if you use it, but it does mean if you know there's something better and you choose to use it, well, you're not the smart money, right? Now, how do we know they use it? Well, because they run their operations using extremely high frequency trading, extremely fast high frequency trading bots. And those bots don't have time to sit there and draw channels and triangles and analyze things subjectively and emotionally. They run trades based on maths that are relevant to the trades, and that's it. And guess what those maths are? Those maths are the VEPs. So, yeah, get yourself over to Alpha Trading's Discord. Once again, alphatradinghq.com/Discord. And that's it for now. See you there. Happy trading.